Now we will look at market structure. So the market has three segments. One, the trend, then the range, then the breakout. So the trend is here. Let's see. So a trend, it can either go up or down. So going up is uptrend and going down is of course downtrend. So when there's an uptrend, the price are going higher and the price is peaking, the price is reaching its higher values. Now for the price to go upwards, it doesn't necessarily have to go up all the time. For example, I'll show you a chart. So we're looking at a line chart here on easytradingschool.com, and between this area and this area, the price went from here and went up, came down, went up, stabilized, went up, came down, went up. So between this area and this area only, we can say that I'm going to draw a box, a pattern. So between this box here, let's see, we can see this is uptrend because it went from here to here. Even though it came down, but it went up again, it went higher than where it was. So overall, this is called an uptrend. And in the similar way, if we look at here, between here and here and here, this is again an uptrend between that time and that time. But if we look at here, from here to here, we can see this is a downtrend. So this is what the uptrend and the downtrend is. Even though the prices are going in the opposite direction, the trend is followed. Now let's look at what range is. So range is basically two borders in between where the price normally stays, normally bounce. So let's look at the chart. I will remove this. So if we look at the range between here, 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 and here. So in that box, we can see that there's clearly a range happening from here. So it starts from here, and it is going here. So there's a range happening here, in which it's not breaking out from this area. It's always going up and down within the range. Now it does break out from the range over here and goes downwards in a downward trend. But so looking into this, the bottom area from which the price bounces up, it's called the support, and the top area where the price doesn't go higher, it's called the resistance line. So this is the resistance line here, this is the support line here. So here we've got formed a support and resistance lines. So support is at the bottom because it's giving support. You can think of it as a structure support, and resistance lines is like blocking to go high, so it's at the top. So this will be at the top. So after a range is formed with support and resistance, the prices most of the time go downwards. So there's a big indication here in this trend also that there was a range formed here with the support resistance and it went suddenly down. So after breaking out, it normally does not go upwards, it goes down. And let's zoom out and try to find more boxes with support and resistance. If I don't see any here. Okay, I see one here. Okay, let's draw this here. So I see kind of support and resistance over here. Okay, I have to delete this. Delete, and then delete this. So if I was to draw a support resistance line here, I draw it here like this, and I can see that there was a support resistance happening and it broke out in the upward trend. It didn't go down this time because it doesn't always do that. But after the support resistance lines break out, it always shifts somewhere else. Maybe you can call this box a little bit, but this is not really a range here. So if you see a range, maybe here is another example. There's a range, support resistance forming here. Okay, I have to delete this. Okay, over here. There's clearly support resistance happening here, and it went a little bit up, it broke out, and then it lost that support resistance pattern, and then it went down. So we can say normally after breaking out, prices go down, so go short. But not always. Now let's look at breakout. So a breakout when the prices push above the resistance area or below the support. So this is something that we want to write here, and we've actually looked at it already, that the breakout in this instance is here. Breakout in the other instance, it's here. So this is a breakout point. So a key thing to notice is that, or talk about, when there is a breakout after the range, support and resistance area, wherever the breakout happens. So this breakout happened at this line and it went upwards, and we know that at this point, even at this point, we know that there is no support, there is no resistance. So this is definitely coming out of the box, out of the range, and this time we can predict that the price is going to go even higher and to go long, to buy, and that means it's exactly what happened at breakout. It went upwards. And maybe if we call this box even here, support resistance happening here, another example. When the breakout happened here, went down. So if you were watching this stock live, this Forex price, if you were here, you know that this is a breakout from the range, and at that time you want to go short and let it go short, and then when you see the reverse trend, you want to sell your trade and cash into the profit. If you look at this one here, the breakout happened over here. So if you want to take a long position, now the difference between this and there is not so much, it's only 2 pips, but it does kind of come upwards, but then for some other reasons it starts to slide down. So you can see this pattern based on the breakout.